Hello and welcome to another Paper Hands Capital project breakdown. So we're taking a look at Sperax. This is absolutely not financial advice. I don't own any Sperax. I don't recommend that you own any Sperax. So what is it? It's an Arbitrum project. It's a dual token system, so it's a stablecoin and a governance token, so one that absorbs volatility and one that is US pegged value. So it's an auto yield generating stablecoin. So simply holding the token, it accrues value. Well, you accrue more of it. So Sperax is a shares model like Frax, where there's one stablecoin, one volatile coin, and the value is pegged by underlying collateral, which is partially dollar pegged assets, and the governance token itself, the SPA token, similar to how Frax has the FXS token and it has USDC backing it. So the two differences out of the gate is that it is backed by a basket of assets, not just USDC the way Frax is, but it's backed heavily by Frax anyway, so it's not a huge basket of assets that it has right now, but it definitely is more diversified than Frax. So the collateralization ratio, in the docs says it increases by 1% a year, almost like regardlessly of market conditions, whereas Frax's CR is moving with market demand. So if the market's selling off with the Frax stablecoin, then it will become more and more backed by collateral, less by the FXS token. Whereas this it does fluctuate a little bit. It's not exactly incrementally 1%, but it seems to do that by 1% a year. So similar with Frax, the minting and burning mechanism, one USDS is always worth $1 of collateral at any one point. So the arbitrage traders keep this peg stable. So there are Frax does have its algorithmic market operations, which help with this as well. For the moment, I don't see that Sperax has any of that going on. It's yet to see a depeg though, so that's one thing. So this is just a little infographics explaining how minting occurs. Burning is the exact opposite. So you just put the 1S USDS in, and then you get your SPA and your eligible collateral out. So DAO members, so you can lock your SPA token, your SBA token, and then you can vote on proposals. So those DAO members are able to propose strategies, and once they're accepted, voted on in, they the actual treasury itself of the basket of those stable coins is allocated to those yield generating strategies. So right now it's Aave, Stargate, and the Frax VST. I think that's on Curve at the moment. So 50% of the yield generated from market operations is sold for the SPA token and distributed to the SPA stakers, and the other 50% buys USDS and distributes that to USDS holders. So this is approximately every 10 days. They don't do it on a set schedule to stop people from trying to front run it and mess around with it and things like that, trying to exploit it. So it's just not completely random. It happens about every 10 days, but they don't publish. It's not public when it happens. So you can lock your SPA, obviously, like I said before, for VSPA, get access to the DAO, the staking. This was a couple of weeks ago. I took this screenshot, but it was at 74% APY. That's if you lock it for the full 4 years. So you can lock it for any time span up to 4 years. So you get 100% of the USDS minting and burning fees. To stop people from swapping back and forth, minting and burning too often. There's a small fee attached just to stop people brute forcing it, or again trying to exploit it somehow. So 50% of the yield generated by USDS deployed collateral. So this is the stuff that's earning yield in Curve, whatever else. And the incentive sponsored by the Treasury. So I'm pretty sure those types of things are already concluded. So the stablecoin itself is, this is from the docs. So unlike most ERC20s, the token contract directly stores the amount of tokens in each wallet. USDS token contract has a shared state variable, so the credit per token thing, and the contract stores each wallet's credit. So it's not, I've written later on, I think this is here, yeah. So you don't actually, as you're holding your USDS in your wallet and you're generating this yield, it's not actually staked or anything like that. It's just sitting in your wallet and you earn more tokens. So the value of your tokens aren't going up. You'll actually have more of them, but you won't have any transfers in and out. It's not like they're sending you tokens. There's just one big shared ledger that updates your balance. So they call it a burn when they buy back these tokens and give them out, but it's not. It doesn't seem to be a burn. It's just a redistribution that they call a burn. So then they have this thing called Demeter, which is a product or a service that the Sperax ecosystem offers. So Demeter is for other DAOs, other tokens. So instead of trying to manage your own Uni V3 pool, they can be really complex if you don't know what you're doing. There's narrow bands of volatility that you have to capture. So they basically take this workload off a DAO's hand and manage their token liquidity for them. So they offer, as they say, engineering, marketing, and financial support. So in exchange for this, they're receiving increased TVL because whatever other DAO comes along will pair their token ABC with USDS. So then there's more farms out there locking up USDS and increasing their TVL. So it allows these DAOs to have concentrated liquidity for their token emissions, earning attractive yield for people to move into their pool and again increase the TVL. So the smart contracts and everything, the engineering side of it, this is the breakdown of the marketing financial. So these smart contracts and managing these Uni V3 pools can be difficult. So they handle all that sort of side of the thing. The marketing, so there's a dashboard, which I've got a photo of next, that on the Sperax website. So it's basically, if you partner with them, you'll get a headline slot sort of on their website saying these are the people. It's just a little bit of advertising for them. So it's not a massive incentive, I really don't think, but they get their name out there a little bit, sort of thing. And then financial, so you can just use this service if you wanted just to pair your token with your ABC DAO with USDC instead of USDS. They charge you $500 for the service, and then you just take it and go. Or if you choose to pair with one of their tokens, their volatile token or the SUSDS, they waive this fee because they're getting their increased TVL and whatnot. So this is what would pop up on the dashboard, one of these things. So obviously the APR at the moment is pretty wild. So this is L2 DAO that's partnered with USDS. So they wouldn't have had to pay that $500 fee, and now they're getting advertised, etc. So here's a few graphics. So TVL 5.6 million at the moment. Again, like I said, they're on Arbitrum. So this is the balance of what we've got. So they're like I said before, they're still mostly USDC and largely Frax, which is USDC. It's just wrapped almost. So they're still 80%, 85% USDC anyway. So it's very similar to Frax. Then USDT, I think there was a DAO proposal to remove that completely. So I think it's 0% forever essentially. And again, this is what I said, the collateralization ratio is moving down by 1% a year. So it's not just on, the 1st of January, it goes from 99 to 98 every year. It's over time, it moves down. Whereas Frax, fluctuates depending on what the market needs. So the big thing is federation, because obviously it's an inflationary token at the moment. And it can be difficult to bootstrap people to lock their SPAR for VSPAR for 4 years. It's all about aligning the community with the prosperity of the of the token and of the ecosystem. So they've got Plutus at the moment, which is one big governance black hole, like as they say. It's just accruing GMX and not GMX, sorry, DPX and Jones and a few other things that I think they're working on. So they're just trying to accumulate all the governance tokens of Arbitrum essentially, and they are doing that with SPA token at the moment. So one thing that is concerning a little bit is that whether you see validity in this or not, but the market cap to TVL is already pretty high, and the full out dilute is like, again, very high. One good thing you can say about it, very good things in the past 6 months, the auto yield. So this is just the holding USDS in your wallet, is about a 10% APR. So that's pretty crazy for not having to stake, not having to do, just holding a stable coin and your wallet balance just going up by 10% in a year. So which makes me, the use I can really see from this is a stable coin for spending as such. So it's not, you don't have to lock it up to actually get your yield. So I can imagine a world where this is just your bank account and it's in your checking account and you can spend it and do whatever else with it, and it's at the same time accruing yield without having it to be locked up, like if in a curve contract when you wanted to actually buy something, you had to take some out and then spend it. So that's one thing that I can see I haven't seen anywhere else. It's unique to here. It's pretty cool. And the positive sum games. So I think they've taken a lot of inspiration from things like Frax. So hopefully Frax doesn't just come into the Arbitrum ecosystem and just dominate, because Frax is in that same mindset of positive sum games. So I think if there's more, what's the word for it? More symbiosis between Frax and them, they can pull together, and I think that there shouldn't be any sort of conflict in that sort of space. So this is our chart here, which is obviously just a joke at the moment. I don't think there's really much to gain from investigating this. The structure of this is just, there's not much to say about it, I don't think. We're up still 170% from where it bottomed over here for, what was it? For 65 days. So yeah, it was swimming down here for quite a while. You could have picked some up and it would have been a nice little play. In this type of market conditions, buying things that have, 18 million market cap, it is definitely risky. This thing could just evaporate, go straight back down 60% very easily. So I don't know what level. If it hits here, this same range it was at before down there, and again does another month of sideways action, that could be something I look at entering. But like I said before, I don't have a position here. I'm not telling you to have a position here, just taking a look at this. So anyway, that's about it. All right, we'll catch you later.